Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Shrikant, joining you live from Bangalore, India Startup Hub. And Krishna, it's certainly been an evening of breaking story after breaking story.
Well, absolutely, and we've got more stories breaking, big voices breaking right here on ET Now Startup Central. This is Krishna Kumar coming to you live from ET Now's Mumbai studios. First up, a check on all our headlines. Chinese e-commerce giant Alibaba Group posts better than expected fourth quarter revenues, with revenues rising 39% thanks to a surge in sales even as the Chinese economy is slowing. Just a week after Transport Department threatened Ola and Uber of legal action, both have reapplied for an operator's license in the state, but it's not a truce as yet. The Transport Department says crackdown won't stop till surge pricing comes to an end. India is at the forefront of digitization, and mobile will be most instrumental for India to enhance its digital capabilities. That's the word coming in from Paul Robson, president of Adobe's Asia Pacific operations. He also says that India is the place to be when it comes to digitization. Traditional players are doing all they can to cash in on the e-commerce boom. This time, MTR Foods, that deals in instant mixers and ready-to-eat options, a household name in South India, is betting big on its online strategy to reach out to a larger number of consumers.
Krishna, let's take it then to the top story here, and looks like there's nothing that can stop Alibaba's run, and we're really talking about its fourth quarter earnings, which came better than street estimates. They saw sales surge by 39% year on year, and this at a time when China's been seeing a significant slowdown, a very slow economic growth rate, but that certainly hasn't impacted Alibaba. Remember, they also clocked that 3 trillion yuan GMV mark recently. To really get a better perspective on both the numbers and what this means for e-commerce in India, we're joined by an analyst who tracks Alibaba quite closely. Michelle Kim from Kim Eng Securities, joining us all the way from Hong Kong, live on ET Now Startup Central. Michelle, thank you so much for joining us. First up, you track Alibaba quite closely. Your own take on the numbers in terms of revenues and the net income.
Sure. Thanks for having me, first of all. Well, I think Alibaba had a very strong quarter, last quarter, and especially looking at the top line. If you look at, as you mentioned, GMV overall surpassed a 3 trillion mark. And if you look at just for that quarter, GMV grew 24%. Year on year. Now, what's great about that is that in the prior quarter, it only grew 23%. So they're actually bucking the trend that they have been setting before. So now they're on the upward swing rather than downward. And if you look at on the retail e-commerce revenue, that portion actually for China actually grew 41%. And that's quite remarkable since if you compare it to the prior quarter, it was only about 30% odd. So from the revenue lines, it looks like Alibaba is firing on all cylinders. And one other interesting point about the results was that the cloud business, cloud revenues, continue to grow at a strong rate at 138% year on year. And that's largely due to the number of paying subscribers growing very fast. It has reached 500,000. So if you compare that number to what Amazon is doing, obviously these are some of the very positive points. On the other hand, our margins were a little bit disappointing. Our gross margins came in at 61%, well below consensus forecast. But I think given how strong the top line is, I think the market will be forgiving mood.
Michelle, this is Krishna coming to you live from ET Now's Mumbai studios. I wanted to understand, you're talking about international operations, overseas operations, pushing those numbers higher. India is eagerly awaiting, Alibaba's direct play as far as the market here is concerned, even as, unicorns in this country are struggling to put up good numbers. Talk to us. Do you think that this will hasten Alibaba's entry into the Indian market?
Yeah, I think it's certainly India is a very important market for Alibaba, and that's why Alibaba has a small minority stake in Snapdeal. But I think for Alibaba, it is still international is still a long-term goal, and for that reason, if you look at Alibaba's revenues, international business still makes up a small portion, only by like 5%. So, nonetheless, it is a very important growth market for Alibaba.
Right. Mitchell, considering that their existing businesses itself is giving it so much of boost, will Alibaba really be tempted to make a big acquisition, get a bigger play in India? There are rumors about Flipkart one week, some other company the next week. So as someone who tracks Alibaba, do you think they will, make a big acquisition, another big one to enter this market? And the second part to my question is, what explains Alibaba's growth? They've really defied the overall slowdown in China. So what really explains that?
Yeah, well, for the first question, it's hard for us to know have a visibility on what Alibaba is going to be investing in. However, I would note that recently Alibaba has invested $1 billion in Lazada, which is a Lazada, which is a Southeast Asian e-commerce company, recently in the last couple of months ago. So, and also the fact that Alibaba has raised about $4 billion in debt, and I would think that they want to obviously use that money to make some acquisitions, and then we don't know exactly where. And secondly, what is really leading to really driving Alibaba's growth is really on the fact that their monetization rate is improving, their take-up rate, you might say, and that has been improving on a year-on-year basis. What that means is that Alibaba is doing a better job of generating revenues from the GMV or the gross merchandise value of their sale of their products. So that's really what's driving their revenue growth.
Right. Finally, Kim, just to sum it up, cloud is something that lifted Amazon sales as well last week, and it's something that Alibaba is also doing. Considering that, Amazon is also training its guns on India, Alibaba is also going to do that. In future, do you really see India becoming a major market for Alibaba? I mean, trillions in GMV would be far-fetched, but do you see it becoming a strategic market going forward, considering Amazon is betting big on this market, and a lot of people expect it to ultimately be an Amazon versus Alibaba battle here?
Yeah, I mean, that's, Amazon's, obviously Amazon does consider India to be a major growth market as well. That's why they continue to invest in it, similar to Alibaba. I think Amazon has invested more in India than Alibaba. But from a cloud perspective, I would say that they both companies have not really spread their wings in terms of what they want to do with cloud in India per se. But globally, it's in certain markets, without a doubt, they will be competing against each other. But in China, I think for China's cloud business, Alibaba will certainly look to dominate.
All right, Mitchell, Kim, thank you so much for taking time out to be with us here on ET Now Startup Central and sharing with us your views as far as those smashing numbers from Alibaba is concerned, and more importantly, throwing light on how soon and how big will be Alibaba's play as far as the Indian market is concerned. Thank you so much. Moving on. Just a week after the Transport Department threatened Ola and Uber of legal action, both have reapplied for an operator's license in the state of Karnataka. But it's not a truce as yet, Chandra. The Transport Department has said that the crackdown won't stop until surge pricing comes to an end. And we spoke to Additional Transport Commissioner H.G. Kumar exclusively, who had a conversation with none other than Rahul Dayama in Bengaluru. Listen to that.
After paying their fees and also security deposit, they also given a list of 100 vehicles. It has been forwarded to respective RTOs for inspection of vehicles, whether these vehicles have been fitted with the the digital meter, GPS and everything, and also that board, taxi board, and also panic button. After receipt of the inspection report, it will be placed before State Transport Authority, and the license will be granted.
Okay. So, but would you agree that now they've really towed the line? You had asked them to ensure all documents are in place, and now both Ola and Uber are slowly falling in place as far as guidelines are concerned.
No, unless we receive the inspection report from the RTO, we cannot say they are 100% complied. Okay. First, let the inspection report comes from RTO, then we will decide.
Okay. So, two questions on search pricing. Still, a lot of consumers on social media platforms are complaining 3x, 4x search pricing there. So, what's happening on that front? So, you're continuing to seize cabs, is what we understand.
Yeah, we still continue to seize and detain such cabs because such pricing has not been given. Okay, whatever that collecting such pay, it's all illegal and it is not according to law. So we are still seizing the vehicles. Whenever we receive complaint, we are seizing the vehicles.
So as far as that crackdown is concerned, seizure of vehicles, that will continue till they actually put an end to such pricing.
I think Ola has totally stopped taking such pricing. I think this Uber is still sometimes collecting it. We are still seizing and detaining the vehicles.
From that, Krishna, to something that will whet your appetite for sure. We're talking about a brand that's really a household name in Bangalore, in South India, for NRIs. We're of course talking about MTR, and they are now planning to go big as far as their online push is concerned. So I guess the next time you want to whip up something in the kitchen, you don't have to look far, you just have to, make a few clicks. But we caught up with MTR Foods CEO Sanjay Sharma to really find out about that strategy. Let's listen into what he had to say.
We believe that our consumers are changing rapidly, and when we did a little bit of projections on what is going to be the future consumer base, we started to see that the new consumer which is coming out is going to be dramatically different from the older set of core consumers, and maybe in the next 5 to 10 years our core consumer base is going to rapidly change. So this new consumer, which is the young families that are being in the age of 25 to 30 or 35 which are coming into being, have a completely different perspective on food and food consumption.
You've been a little early in cashing in on the online opportunity as well. You're present on marketplaces like Big Basket, Grofers and Amazon to some extent. In terms of traction, I'll come to your standalone portal in a while, but these marketplace models, what sort of attraction are you seeing for MTR products on these platforms?
In the last 2 years, we've seen our business jump up from 500,000 to 3.5 million. About 7 times, our business has jumped up. While I fully agree that the base of 3.5 million is still very, very low, we believe that it signals that this is going to be an emerging trend in the future.
You've launched the standalone portal last week. What's your game plan as far as your very own portal, the e-commerce strategy is concerned?
The e-commerce portal is really based on the strategy of making available all our products and ensuring that the consumer has the ability to browse through and buy what she gets attracted by. So this is really where we are coming from.
How would your delivery on ground work? Are you partnering with logistic players, and also would your retail outlets serve as a platform for you to start delivering products to consumers?
So currently I think the model that we are using is using the delivery systems which are there in the industry. So we are partnering with a few logistic providers to ensure that we deliver. The other thing that we're doing is our scale up is going to be very, very calibrated and slow. So we are starting with Bangalore city, okay, and then we will slowly expand it to other cities in Karnataka before we go to neighboring states, before we go to metros, and then really talk about taking this to larger number of towns across India.
Any timeline by when you would be, say, your standalone portal to be present in the bigger metros and the tier 1 cities, so to say?
I think a timeline of 9 to 12 months is a reasonable kind of a learning curve that you can put in this.
Lastly, as while Big Basket, Grofers subsidize products, your standalone portal, just want to know would you get into the price game, the competition game that online e-commerce space is seeing?
No, I think as a brand, our brand value is to be a friend in everyday life with our consumers. We want to add value to their lives, and we don't feel that discounts is something that we are really going to use aggressively. I think it's the availability platform. It's the platform of engaging consumers to know that this is all what they can do with our products.
Krishna, we wanted to know what the top selling categories online were, Grofers and Big Basket. Turns out turmeric and vermicelli are the most popular products, and the ones who buy the most are people from Bangalore and Delhi. Just a little nugget for you.
Chandra, I'm surprised because I can understand Delhi, because I'm sure all the South Indians who move to Delhi depend upon MTR to fill their tummies. But considering I did that when I was doing my studies over there, also vermicelli, I would always have a rava upma mix at home of MTR, just in case I don't get anything to eat. So vermicelli, that's a bit of a surprise. But moving on to another big voice here on the show, we have none other than Paul Robson, President Asia Pacific at Adobe, who was just in India just a few days ago. Now Adobe is betting big on the Indian market thanks to the government's Digital India mission. I caught up with Paul, who told me that India is at the forefront of digital, even as the entire Asia Pacific region as a whole is exploding. Take a look.
This is such a vibrant region. The Asia Pacific region is exploding in terms of all things digital, and India is really at that forefront. The investment that we're seeing from the government in the startup community, the investment that we're seeing from multinational organisations like our own in people here. I mean, we have our second largest office around the world for us is here in India. We have many people in Bangalore and up in Noida, and it's just such an exciting time to be working in the emerging markets.
Okay. Digital India I was asking about is because the government says Digital India is going to be the key growth driver for India's economy going forward. For a company like Adobe, what kind of opportunities does it throw up, and more importantly, how do you view your expansion plans in India, keeping in mind Digital India?
I mean, I agree. I mean, if you think about digitization and organizations moving digital, it represents the ability to create a compelling and competitive advantage. Organizations that want to compete with their competitors are now using technology to do that, and that's digital. For organizations like us at Adobe, where we bring to market technology that enables websites, that enables data and analytics, that enables organizations to extract insight and intelligence from that data. It's all about creating an amazing experience for the customer.
Okay, before we address number crunch, Snapdeal has just sent an announcement. They've made another acquisition, Krishna, targeting Mantra. It's a predictive marketing technology firm and a 2-year-old startup. So yet another acquisition as far as Snapdeal is concerned. But with that, we really come to the final segment, which is number crunch. And the number we are crunching for you today is 12.50. Believe it or not, that's the amount you may have to pay to get a breath of fresh air. That's what Vitality Air, this Canadian company, is offering. Now, they claim that what they do is a big secret, but they basically say that if you want a breath of fresh Canadian air in a very polluted city like New Delhi, what you have to do is pay 12.50 rupees per breath. I would have never thought that, Krishna, there'll be a day when I'll have to pay for a breath of fresh air, but considering the vanishing green cover and the rising levels of pollution, I guess this day was only coming when someone decided to monetize even this.
Yes, and 12 rupee 50 paise sounds like very little, but keep in mind that's every breath. This I just spent 12 rupee 50 paise. There you go, it's 25 rupees. Every breath I take, I spend 12 rupee 50 paise, and it's not just Delhi, Chandra. It's your lovely city of Bengaluru. It's my hometown of Chennai, and it is the financial capital of Mumbai. All of these big cities in the country that are struggling to keep up with all the pollution that's going on around. And let's just hope that there will not be that day when we would actually spend that number that we've put up here on Number Crunch. That's the hope, and I'm keeping my fingers crossed for that. And with that, we wrap things up here on this edition of 80 Now Startup Central. But don't go anywhere. Keep watching 80 Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.